Good morning, everyone. I'm Kevin Hincks. Welcome to the Daily Trader with Kevin Hincks. We're going to look at two good names today that are moving in the markets. A lot of news out on them, a lot of popular high-profile names. We're going to look at Broadcom, also known as AVGO are the call letters, and then Supermicro, which we didn't trade yesterday but had big news out yesterday and is trading, again, very active today. So let's get to our first name, and that is Broadcom. Now, Broadcom's been in the news lately as clearly setting themselves up as the number 2 player in AI chips behind NVIDIA. Everyone thought it would be AMD, but it seems like now Broadcom. Why? What differentiates themselves? Remember, they design, develop, and supply semiconductors. But what do they do that differentiates them? Custom AI chips is what they do. Their earnings were driven by strong revenue growth, driven by custom AI chip demand. So that's their niche where they seem to be carving out themselves. And they had big earnings. The stock was incredible rallies the last 2 days. Now, down today, though, as the incredible, as you could see the chart there, incredible rally off of their earnings event and the realization how big of a player they are in AI. But that being said, there's still some hurdles to climb for them, and the stock is down $14, down about 5.9% here as we get to the 9:30 hour in Chicago. So how do we look at a company like Broadcom? Now, long term, yes, this is going to be a major player in AI because of what they do. Also, VMware, the acquisition, boosted their growth and profitability. And it's enhancing their entire AI infrastructure, the VMware acquisition. So that will help them continue to expand. So this is a stock, may be a little overcooked right now, but certainly one that you should watch in the future how it trades. The trade we looked at, though, because it's run so far, so fast, we looked at a January 3rd, December 20th, 230 put calendar spread, just acknowledging how far this stock has gone, how overbought it is, and now it's starting to break off those overbought levels. Remember, if you do a put calendar, you have two things, right? You have the directional play in terms of, it's short of the 230 put calendar's got about 4 or 5 deltas on it, not a big delta play, because it's not a diagonal, it's in the calendar spread family, so it's the same strike price, but you've also got 11, north of 11 Vega. So every point that Broadcom's implied volatility goes up, you're profitable. So any move on the downside will probably get a pop in volatility, and so you'll get the directional play and the implied volatility. So buying the January 3rd 230 put, selling the December 20th 230 put. I put it in about a $3.10 debit. The stock sold off. It's trading actually about $3.13. So right there around $3.10. It's collecting theta. It's short deltas. It's long Vega on the downside. And so this is a move that you're looking for towards the $230 strike in Broadcom. So just something to take the other side of a massive move. The 1 week move in Broadcom up 28.5%. The 1 month move up 42%. Down 5.9% today, though, as that euphoria about Broadcom may have peaked, at least in the short term. So there's our trade in Broadcom. The second one, we want to look at something we talk about a lot on these little podcasts, is Supermicro. Now, Supermicro had some news out yesterday. Number one, they are the end of the month, they're being taken out of the NASDAQ 100. Not a big deal, but certainly not positive news. They just went in July. Now they're being taken out. There's a report out, not confirmed yet, that they're trying to sell stock and sell bonds to raise more capital to shore up some of their balance sheet. Remember, the internal probe, one issue about this stock that I've noticed is very almost zero comments from the company on all the news that surrounds them. They really don't comment on anything. The last comment they made, no evidence of any wrongdoing from an internal probe. As you remember, Ernst & Young resigned. BDO came in. An independent auditor found no evidence of wrongdoing. But the stock almost touched $50. It did very briefly. It sold all the way off down to $32, $33 range. It's about it's just under $35 now. So the trade that we put on here, the trade that I'm looking at here, the paper money practice trade that we're putting on in Supermicro is the call diagonal. Buying the January 10th 34 call, which is about $1 in the money, less than $1 in the money, and selling the December 20th, this Friday, 38 call. I put that in about $3.45. It's trading about $3.55 now. So it's up about a dime from where we put in, trading just under $360 as Supermicro recovering now up about 4.5% on the day today in Chicago. Now, looking at this trade, about a 33 delta on this trade. It's theta about $14.50 a day. And again, because it's in the calendar spread family, because you're buying January 10th, selling December 20th, about a 3-week spread, it's also long Vega. So we'll benefit from higher implied volatility. The risk on both these trades, the put calendar and the call diagonal, is the debit paid on this spread. So you're looking for a move. Remember, the key is the short strike in both trades we're talking about today. It's the short strike in Broadcom. It's the short strike in Supermicro. In Supermicro's case, it's the $38 strike. That's where you're looking for a recovery to up around $38. So there's our trades for today. It is a bearish play, fading the positive news on a down day in Broadcom. It is a bullish play, a Supermicro call diagonal, both paper money, both practice trades. Make sure you understand the risk defined is the debit paid on both of these. Have a great day, everyone. I'm Kevin Hincks with another edition of Daily Trader. See you tomorrow, everybody.